Welcome, investors, traders, punters and dribblers, to our Friday wrap-up of another violent day on the markets, the traders community. Just a quick podcast. We're coming to you late. The boys are in the gym. So just myself here, quick wrap-up. One of those perfect days, technically, that broke down yesterday, as we said, as it's very important to have your strategy in place. And when the technicals line up with the geopolitical and order flow, and this one was one of the more predictable moves. And thank you all the DMs and the measures. It looks like everyone did pretty well on this one. So hopefully some of the pointers we're getting through the way the trading works. Of course, it's different in different markets, but in futures, options, it's very important to watch what's going on. So if we quickly go through the bear action today, let's summarize what happened today. Lots of blood on the street. But again, if we just recap really quickly what's happened, we all knew it was going to be a high inflation number, didn't we, yesterday? We all knew we had the 30-year bonds coming up, and we knew Bullard was due to speak, and we knew what he was speaking. And everyone's up in angst. We have 7.5% plus inflation. It's all the Fed's got to do something. The Fed's going to do something. And then when they do it, they're too much. And all this double talk about Fed doves and Fed things to smooth out the market. Well, the trouble is, it's very easy to blame when it's against your profit, which is what a lot of these things are, or to create clickbait on TVs and websites. But a lot of it's logical. The whole thing of Ukraine, that's been building for a long time. We've mentioned, ad nauseum, our view on it, and it seems to be fairly accurate with what's going on there. So these aren't new. And remember, when you can buy these puts is when you want to buy them, when most people aren't, not where you have to buy them. So one of our better days in the room and in the group, obviously cheap puts, the market falls, futures, and we were very concentrated, as you know, on what we were doing. So without further ado, let's look at the final numbers. The Dow finished down 500 points today. The SPU's down 85, Nasdaq down 394, and the Russell down 21. The worst was the Nasdaq down 278, as you would expect. The best performing was the Russell, the small cap. Some really negative highlights. So Nasdaq had its worst two-day performance since September 2020, down 4.8%. Let's call it 5%. S&P had the worst two-day performance since October 2020, down 3.6%. And Dow was down 621 points at the session low. For the week, the Dow was only down 1%. So we did have that good move up, remember. Let's hope you book the profits. And this is why, I noticed some people don't like the reference to dribbler and that. Well, there's a reason for that, because we want people to be fixated. If they are playing, this is a real world, and we're trying to help that. That's the goal of Trades Community. Has done from the way day one. So take your profits, look at them. Don't be anti-panty. Don't be hopeful. This was very predictable, and you look at them all. We're not gamblers. Well, I'll put it that way. S&P fell 1.88% for the week, and Nasdaq down 2.18%. So we were up pretty handedly up until the big sell-off yesterday. There was a nice bounce, remember. And we saw each day a constant attempt to buy the dip. So that's on your charts as we went through. So you don't ignore that. You don't want to be bearish for the sake of it, and you don't want to be bullish for the sake of it, right? 2.18%. So, so let's be realistic with all that. Okay, so moving right along, let's see what else happened as far as the final numbers. So the other thing we know is, so that all happened. there's a few earnings out, but it is Friday. Under Armour was basically the only one. I didn't trade that. Madabi traded it. We can look at that real quick. But pretty well, as you know, we've isolated ourselves into maximum efficiency and maximum risk management. So it's when things are moving this fast, you don't want to trade too many things. So SPUs, oil, and Natty haven't done anything in the last couple of days, as you know that pattern. And then the odd stock play we've been doing as far as news related. And just generally, if they are bear setups, we do have our dribblers and all that sort of thing as we talk about. As far as oil goes, still that same move going up, keeping it tight. And some of the oil stocks we still have, as you know, the core. And one of them, P10, was busting out today. We able to buy some cheap coverage on a lot of these in case something does happen. As far as the Ukraine goes, Putin and Biden are having a call tomorrow. We do have the Olympics on. We just, the whole, as we said, we have people on the ground over there. They're not exactly happy. And so you don't have to be a conspiracy theorist or anything like that. Just open eyes, ask why wasn't things done before, energy prices, policy. There's plenty of things. Whatever the reason is, that's why we combine everything. Okay, so oil actually got over $94 today. And let's bring up the charts now, shall we? Sick of looking at that bear, no doubt. Where are they? There they are. So at the end of the day, Russell managed to stay over 200, 201. I should say 2001. And then the S&P, this is cash, 4424 after hours. The Natty, 30, let's get over there, eh? I was doing some work on that. Almost back to 4. You can see it started to move up with oil, got over $4. And oil itself, 93.88. It gave a little short trade up there, which we scout 94.50 when things got heated. And it is funny seeing just the markets mocked. If you're going to trade a day-to-day, you're going to miss the bigger picture. You've got to have an open picture plan. And that's why we go top down, top not. But really, I'm tired of some of the stuff out there. And so I don't know how much time we want to be on social media. It's just constant stuff about, which is disappointing with different people that we respect or whatever. Or, have an opinion on. But really stay to the cut and dried right here. Know your risk. Know what you want to. And you don't have to be trading. You don't have to always be trading or investing. What we are is traders, though. That's what we do. That's our job. So just keep that in mind. It's very hard to be part-time or a hobbyist in these kind of markets. You're kind of putting yourself at the mercy of some serious violent swings. And, you got to be 100% focused on it. Particularly if you're trading things like the futures, natural gas, oil, S&P, T-bonds, etc. Right? So anyway, so we know as far as sectors go, let's have a quick look at that just for one reason. They were all down except for 2 today, and the one that was up was, we all know what it was. It was energy sectors again. We saw some of our calls hitting 52-week highs, and some of them are probably all-time highs. Diamondback, I mentioned P10. COP, which is ConocoPhillips, Exxon. Some that I look back and I got out too early, mainly because I didn't roll call positions or just took some off. Halliburton was one, of course, and Apache, two of my favourites that unfortunately you can't be in them all. And the play that's going on with commodities, so the Rio, the Alcoa. Now, remember, a lot of people are new into these, and so just keep an eye on that. And there are dribblers amongst all these. Some of these stocks are just on there for the ride. So be careful with those energy stocks. They're not all as they appear just because they're in the sector, and we know that from tech, right? Those that and trade tech. Same thing, same rules. If they don't make money at these levels, they don't have production, they got too much debt. That's no different different to what we would claim as a dribbler. Now, that's a good punting stock if you're doing it 100%, watching it, no earnings, be prepared. So the other thing is if they don't have money, these companies have secondaries too. Now, they're a little bit harder because of the anti-fossil thing as far as banks lending these guys money. But there could be, there's rumours of private equity deals. You saw there was a rumour of, I think it was Conoco selling stuff off. So there's all these different things out there that can be, you can make money on, you can lose money on. So just be aware of what's going on. And yeah, really at the end of the day, we're here just to show how we trade, what we trade, kind of from that side of things. So if people are upset by that hard talk, then there's a reason for that. So I'm not sure where that's coming from. Anyway, the only number we had out today was the University of Michigan consumer sentiment. And if you recall, that drops 15 minutes earlier to subscribers. And the SPOOs actually ran up on that. I remember I was like, oh. And Madavi was spot on that. That's exactly what a firm did yesterday. People assumed it was good because the market moves, so they just follow for the sake of following. And then when that number dropped, it came out at 61.5 from the final reading of 67.2 from January. The consensus was 67.5. That's a big miss. And it marks the lowest level for the index since November 2012. Now, that shouldn't be a surprise of inflation. As we mentioned, we expected a miss on this, we said last night. But we'd be lying if we thought it was going to be this big, right? But people are upset. Omicron, political malfeasance or ignorance, or however you want to term it, that's what's going on. The real partisan attacks, that just divides nations. High inflation, high energy, excuses, threats of war, what's going up in Canada. That's upsetting. But people, down here in Texas, we're kind of oblivious to what some would say is north of Dallas, right? Well, really, Huntsville, whatever. All jokes aside, that gets in the psyche of people. There's a lot of things to make you unhappy. I actually thought the 401k might have softened some of the blow, but if you were specifically which a lot of people were, all in the high tech, high flyers, or even the dribbler sort of things, as we've seen, a lot of those SPACs are specifically in that, and they're down to nothing, some of them, virtually, right? So, as far as the end of the year goes, we are now down, year to date, 4.4%. For the Dow, SPOOs are down 7.3%. Russell is down 9.6%. And Nasdaq is the worst of the lot, down 11.9%. And we know 41%, if someone wants to correct us on that, comes down to that big group of stocks. Apple, Microsoft, Goldman. Did I say Goldman? I meant to say Google, and Facebook's obviously taking a real hammer across that. So the talk was that there was I'm trying to think who it was, but they ran a story on PBS that they have sources believing that US president is saying that the Russian president, Vladimir Putin, is going to invade Ukraine and has communicated as such to the Russian military. Now, a lot of wags out there, this would be a perfect time. We got the Super Bowl, show, Russia versus America, strength, that sort of thing, eyes on it. Olympics wrapping up. Some wag even said that Vladimir Putin's all annoyed with a girl being positive on steroids or drugs, whatever it was. So anyway, one thing we know is that we go back to oil. So there is some safe haven buying. So remember earlier I said to be very careful with bonds, to look at it objectively and what the mood means. Sometimes it's like you saw because of inflation. The other one is it's a safe haven buy, and we saw that today. Gold was up a little bit today, but it's not what it used to be. with that. But if we look at the Treasury yields, the 2-year fell 4 basis points to 152. Remember what that is. That is the sorry, my brain, Fed funds comparable. The 10-year fell 8 basis points to get back under 2 to 2.96, and the US dollar index itself was up 0.5%, 96.03. The other thing to watch is the hedging premium, the volatility. So we look at the CBOE Volatility Index, the VIX. That was up 14.4% today to 27.36%. And when it's highlight that, as we've said many times, be wary if you're trading your options aggressively. So you got to take basically. Sometimes you take your puts too early, which sometimes we did a little bit of that today. So we take them off in pieces because you don't want to be caught with the whole thing at the top, because when that bid falls, it falls very quick. The top of the put price, bottom of it. So all that's very crucial to your trading. So here we have where we fished. Let's have a quick look at the SPOOs. Where have we? Let's look at the actual cash index. So what we talked about the last few days, well, actually, really the whole strategy. If you know, we keep this. We have a strategy we've developed, top down and top bottom. We put that on our weekly. It's all free, so be happy to share it, ask questions. But things are predictable. As I've said, people are unpredictable in a predictable way. So what we know is, and this is what's beautiful, look at the replication of this channel. Now, week broke under it, and in this when it started balling, so from our point of view, we covered a lot of our SPOOs here and through down here, right? Now, look at what it did. Look at that level. It's 44.02. Remember what I said about open interest and the gamma levels? Look at that level, right? Now, when it gets really high VIX like this, that's when the charms, that's when you look at that kind of thing. So remember, I try to say, keep it simple. So you know your delta, you know your theta, and you know if you're very short dated, then those become even more important. Remember, they're the secondary Greeks. So that's your Vega versus your delta and the speed of all that. Just think of speed of change and use your chart. So you're coming in, as you'll see, to those support levels. So that's your daily. Your weekly, remember this was all over with the, we went through these levels. Remember that was where we put it. Sometimes you just get this lucky, right? But you're looking for levels and confirms. That was your level. It accelerated when it broke the Cajun. You can see it on the daily. So key is patterns. Previous levels, so that's your order flow. You want to see it work, spits and spits of flows. And you combine all this in with your Murray and your Ichimoku and the reason I like these and there's a friend of ours, Giuseppe, that is really good over in Italy on the median line, really good on this sort of stuff. So I'd suggest you follow him. Really good technician with that. So we look at that. Here's our 3 minutes, and you can see that was that buy here where we got aggressive buy when it came back. Oh, remember, 4,400, right? The same thing happened at 4,500. These are big levels. And this is a Friday. And we pop over here to our 4 hour, and you can see, look where it was. It was pretty easy. It's where we got aggressive. Easy if you're disciplined. It's not easy in the moment because you got to, I don't want it to sound like that at all, in any form of arrogance, anything. So it's just a systematic approach. You're looking where it is. You're looking where you already know all this. You know your OIs. You know, if you're with E-Trade or Morgan Stanley, Goldman, any of these shops, who am I thinking? Interactive, you all got good option grids and everything. You look at that beforehand and for this stuff. Now, I don't think we did any trades on stocks other than there was a ACB we had overnight, covered them all around 450. That was a nice one. 506 I think was short. And Madavi made a couple of shillings on the who was the it's hard when I'm here by myself. I'm talking to myself. Under Armour, that's the one I'm looking for. So we can see all these levels. And how they shape up on Monday is these patterns, and we know the news over the week. So we know that Bullard's going to talk on Monday. We know that we're going to get more of Ukraine news, what's going on over there. So keep all that angst in the market. And it's going to be interesting if it shifts to an aggressive from buying the dip to selling rallies, right? So that's going to be interesting. Let's look at the NQ. Now this is the futures. For some reason it's popped up with this symbol. But we can see how perfect it was here. We tried to break up. Identical really to the SPOOs. Not as strong, but identical as in testing. This actually did a bit of a spit, meaning it got above it, not really meaningfully, but did get above it. And then we came back hard. And look at this. This is what made NQs a lot harder than SPOOs. So it's easy to say it's easy. It's not. So putting all that news together and watching it. And it really helps, sometimes take it the wrong way. It's not meant to be the wrong way. But if you've traded sides, you've traded bonds in the pits or something like that, you get the feeling what's going on there. And as I said, it's a couple of good people to watch that, but we try to pass on, we're knowledgeable from those areas, how that works, right? So it's good if you're not through there, then try to understand the psychology of it all. And there are some really good teachers out there in the basics of it all, like that we know out there. So that you'll just see us from people that follow us and stuff, and give nice comments. So there we have on the NQs. You can see that very clearly on the weekly. You had that double flat, which is unusual. That was telling you, it was giving it a chance, right? Like a magnet, but it failed on that break. And this was telling us. And no, that's not a kiss of death, someone just asked me. But we did get one here in the 30 minutes. More likely to see it. You can see how it closed. And really, these kept recalking. So it kept you short. On the 3 minutes, if I go back to the SPOOs, where are we? It did give you some buys down here, right? Because this recalced as well. So that gives you an idea how far it goes. But look on your 4 hour, that was minus 1/8. See down here on the 28th. So we haven't quite got to that level. So it would have been easier. But because it was a Friday big gamma level, obviously would have been easy to get in here somewhere. So it gives you some idea on the downside. Okay, let's have a quick look at Apple. So first one, we got a lot of messages on Affirm. So Affirm, as we know yesterday, that was the one that the guy released his earnings. Everyone thought it was good. I kind of messed this one up, didn't do it, but Madavi did, if you remember. Really nice trade. So just think, this is why we mentioned dribblers, and it just means don't get caught into all that talking, watch room. In other words, stock promoters. And people that just aren't all about having, and it's a hard thing, I get it. These things ran up so much. With the COVID rally, whatever you want to call it. So anyway, this thing basically in half almost, right? 45.80. Look at that, brutal. Uber was the other one. Continued on its lows as you'd expect. Apple, real classic stuff. This was one, again, we had puts on. We trade that really nicely. Nice technical trade. And here we are, the 10-year bonds. Now, I'm going to show you this in different times, but the one we watch, you can see, just look at the technicals here. Plus 1/8 overshoot, under that previous high. Now I'm keeping it in yields because that's more what you understand. Most of us that aren't bonds aren't familiar with, So there's nothing wrong with that. And look where we come, all the way back. So nice technical move. So we go to the 10-year TNX. You can see what I just showed you. There we go. On a daily basis. So look, overshoots on the cheek owl, big red. And you know, it's why don't get caught up so much with the yield. Remember the safe haven aspect. That's real. I know everyone, fiat, end of the world, the reset, all that. You know, let's keep what's worked for since Adam was a boy and some of this stuff. Okay? And there you have it across all ages, all sizes. Now, here's our little favourite, obviously. So this is oil. I put it on a continuation for you. So this got up here, 94.70. I remember seeing 94.60. But anyway. Perfect plus 1/8 on the 5-minute. Really nice clouds. Look at perfect measured move in 2/8. This stuff is fast and dangerous, but beaucoup money being made on this because it's going the way, right? Very predictable for those that are fundamental and technical and geopolitical. Now, you cover yourself. The vol's obviously high, and follow our friend Greg, Commodity Vol. Really one of the best I know. Not just saying that because he's a mate, but on understanding how all this stuff works. And he does that stuff with us every week with Into the Vortex and Around the Barrel. So anyway, look at these levels, and you're getting lots of spits and spits, right? The hardest thing is trying to stay with these. So what I find is it's good to let some out or use optionality. The same as no different to the puts on the downside. So it doesn't always go this well, but hopefully a lot of people got an understanding of what we do. We have met a few people in the rooms and stuff. Hopefully they've learned it and pass and get it. I know it's in your face, this sort of trading. It's not for everyone, but that's how it is in the big shops. And that's what makes these things move, believe it or not. So let's have a quick look. We looked at the stocks from yesterday. The Bitcoins. Let's have a look how they did. So what's interesting is they're following the risk assets, like what do you call it? Sorry, my brain's upside down tonight. And thanks for that. Yes, Sarah, oil has been rocking. Yeah, well, that's kind of our game, I guess. Mainly oil and gas for the last 15 years, 10 years. So we should get it right, really. The trouble is when you know, in these kind of runs, sometimes it's the people that aren't, it's not their dig, as long as they get out, right? Kind of like the dribbler we kind of make. Who's the classic from that? It was at Upstart, the guy on TV that someone asked him what the company did. I bet he didn't get out, but sometimes those guys get lucky. So there's nothing wrong with being risk adverse in a violent geopolitical move, and that can save you on. And that's why I kind of caution on natural gas if you're not from that world, and even if you are, it can be brutal. So anyway, as far as let's get back to this. So Ethereum really held up not too bad. Down, I mean, these are big moves. $400 here and 3,000 on this here today, right? So big moves, but right into support. It's interesting that this one. Well, I tell you when it is following the equities, but of note is gold and our friend Vince, who we'll do something with in a bit, really knows his gold. I mean, I haven't traded gold. God. Way back when I first started trading, I traded some bullion, that was it. So I'm not well versed on it, but it is worth mentioning that is up today while this is down. Should we look at that one trade that Madav did? Where's that one I got all the stocks on? Just to make it easy. I'm not making it easy. Nasdaq, we went through. Oil. We'll find out in a sec. So, Natty, 100%. the same thing. Remember, if you trade this, be very wary of the overnight market. The weekend market, because you get the models. It's going to gap up, gap down. Now, this may sound funny, but I've seen some of the craziest moves on Super Bowl Sunday. Because a lot of these guys, no secret, a lot of the big guys like a punt. So, a lot of them are dribblers, that's true. So, the market opens up, usually as the game starts, right? And they're all betting like crazy, not just squares, betting. So you can imagine, people that have been on the drink have these big limits, half cut. So sometimes you get some crazy moves on oil and gas. Now, if there is some geopolitical, just say an invasion or war or threats of it, there could be some silly moves in both the big energy, oil and natty. So sideways, like I said, there hasn't been a trade here to be done last few days. And you can see why, right? And, here's the thing. If this could gap down on more bearish weather and you're out here, but it's not really worth the risk, right? And, of course, it can gap up to fill the gap. So you got two magnets either side, so that's just a pure punt, right? So keep that in mind. Let's just put in here, what is UAA, I think is Under Armour, correct? Yeah. So they had, we got some hungry pooches in the house, so I can't be too long. So Under Armour came out. Madawi gets up, he's in California, gets up really early and trades these things. And, very seasoned, been doing it for a long time, so he's more stock expert on this stuff. So we can see it got as high as 22.40. And it's come all the way down here to minus 2.8, which was a double bottom. So he got, I want to, from memory, I didn't do the trade with him, but we talked through it. I was just in all my stuff, more futures and oil, and there was nothing, just what's going on in crude, right? And a few other blokes in the Discord, they trade, they're just exclusive energy traders. So anyway, around here, and he got a good $2 out of this, which surprised me. I was thinking, it's already down there, so I didn't think it moves much. And this was prior to the real whacking. We were down overnight, but remember it came back to be actually up. So that's the other thing. If you are a disciplined trader, these things are giving you a chance. Like yesterday, it came all the way back for you to sell perfectly. Same thing today, right? So be open-minded both ways. Don't become a Uber bear or Uber bull. But when I see people mocking Uber bears or Uber bulls on things like Twitter, it makes me look at them. And then if I see there's just all self-promotion, then I have no interest listening to it. But there's a series of really good, there are some really good traders out there and they're technicians. And we want good analysts. We want good traders. We just don't want people pretending they're either way, right? And so that's pretty well CNBC right there. So that's that. As far as next week, I haven't really looked at the earnings. I just want to do a quick update on where we were, and hopefully this helps people kind of an idea of the mindset. As you know, I think it's really important to get your mind right, enjoy your family, your friends, weekends, do what you do. Stay fit and healthy is a good thing. Activity. And it was a pretty intense 3 days, so we traded pretty hard. So we needed a break. So this is about the earliest I could get out there. But thanks for all you people that support us. There's a good small group here. And thanks, I think it was the old Pit Boss. Why aren't there thousands following these guys? Good question, I guess. But guess it ain't for everyone. And we're not real good at promoting it. But anyway, we will, hopefully it slows down. We've got a lot of exciting, so I really want to, kind of the goal is, it's not just talking about trading. Hopefully it understands the mindset. But to get to that mindset, we got a lot of interviews We'll open up a lot of stuff like myself and others, but a lot of people we know, big sports backgrounds, so a lot of people from pro sports and likewise, or just other avenues in life that have developed a mental toughness, right, which is necessary, but combined with an open-mindedness, that's kind of what you need in trading. In Australia, there's a expression, harden the F up or whatever, and that can sound harsh in the culture, but the idea is more, obviously there's a time and place for that, but it's not just to be blindly tough, but to be focused and hard. There's a time to let off steam and muck around. So use your weekend for that. Cautious Investor and some others will fit in, and the input we do on the weekly, give an overview. I haven't really gone through all the other markets, the currencies, gold, etc., to really give an honest opinion about them. We've gone through the bonds here, the SPUs, the NQs. I didn't spend too much time on Russell because it really didn't do much. That was a bit of a struggle this week, to be honest. It looked like it was moving one way or the other, so a few little dingers on that one, actually. But SPUs was classic, NQs being classic, oils being classic. So it's important to understand the waves and the things like that. So we will work on that. Yeah, we just got to tie everyone up, Sarah. But yeah, I've been fortunate in the career and just different things, people we know. So these guys are buddies that are happy to share it, that stuff. But that's important. So I just think the mind bit is like W.D. Gann said. It was something like I can teach 85%. No, sorry. I can teach anyone how to make money, right? With it's all mathematical and all that in certain markets and cycles. But it was either 85% or 80% of those people having all those tools will still lose. And the reason is, it's not what you think, like not enough money or something like that. It's nearly always ego. Like, I can do it better myself, or not the discipline to stick to those rules. But anyway, everyone have a great weekend. Thanks for joining in. And we will see you probably Monday, maybe Sunday night. We'll see how the Super Bowl goes. So good luck for the Bengals. I know that's everyone's, what's the word? The sentimental sweetheart. And, of course, the Rams. So I don't really have a view either way. I'm as far happy whoever wins. But I know it's been a really, really good season for games. To be honest, NFL I've found pretty boring last couple of years. But this was a super series. And I think if you like your sport, enjoy it. It's going to be weird about Tom Brady, right? But have fun. And if you're Australian or New Zealand or England, the rugby league season kicked off in England, actually, with the Super League. In Australia, the NRL, which is the biggest rugby competition in the world of either comp, starts off with the All-Stars match, which is the Indigenous players versus the Maori players. So it's respecting all that. It's kind of cool. It's the only country that does it. So if you see that on YouTube, enjoy that. For us, so we'll be watching that, and we'll be watching the Super Bowl. That's our weekend. Lots of barbecues, and no, I will not be trading drunk, Sarah. I promise. Okay, see everyone. Have a great weekend. Thanks for listening.